trading edge isn't how you trade, it's what you trade. And I'm going to break down a great example of this recent trade in MDB. This is a super repeatable A-grade setup that anyone can add to their playbook. And the reality is this is important because the majority of our gains come from a small handful of these top tier opportunities. This MDB trade gave us several high quality entries following the earnings report, and it all started with identifying the big picture. So let's get into it. Part one here is the big picture context. Before you can even dive into specific setup that you're looking to trade, you have to understand the big picture of what's going on. So starting with the technicals, the stock has been stuck in a big weekly consolidation phase for a while now, most of the year and 2024. Whereas previously, this is an important nuance, has been a leader within its space and has done really well in the past with some very large growth earlier in 2020, 2021. So after being stuck in this consolidation with that historical context of being a very strong name, we got an earnings report that absolutely blew expectations out of the water, and this was gapping up significantly more than implied. We graded this catalyst a 9.5 out of 10. It was very significant, and that is a super important thing to understand, and helps explain that statement I made at the start of the video of what you trade is actually more important than how you trade. And that, may sound controversial to many, but as we go through this video, you'll start to understand what I mean by when I say that. So outside of the earnings and moving beyond the implied move, we're breaking out this big weekly consolidation structure, which you can see here in a very aggressive way on the earnings report. All right, so now that we have the big picture context out of the way, let's dive into how we traded this. So the first trade is the opening drive, and it's worth noting that most trades like this that have this big of a catalyst will oftentimes set up several different opportunities. So if you don't have one in your playbook, you can, focus on another on the same name. And after this video, you'll have a couple setups to go to and add to your playbook when these types of setups show up. So the first one is the opening drive trade, and there was a few variables that we need to look at before determining if we're wanting to take the opening drive. So if you're not familiar with an opening drive, the idea is to take advantage of momentum that exists on the open. It's as simple as that. And there's a couple different variables that we look at to determine whether or not we want to participate in an opening drive. So the first thing we want to look at is if there is confluence on the higher time frame with where the pre-market is at. So there's a 280 level that the stock had on the higher time frame that pair it up with this pre-market structure. And then with that, it kind of gives you a basis for where, the trade is going to be near the open and how to approach it with stop losses and targets if price maintains above that price. So this 280 spot, which you can see within the range at 280, was just basing here. Now, this is a very key variable. When we look at an opening drive, we want to pay attention to the pre-market structure. The key thing that stood out to me the most with this structure, which is mostly trending, is the shallow dip. So just think about this logically. If a stock gaps up this much, 30%, which is significant, way more than the implied move, but doesn't see very large dips, what does that tell you? It just tells you there's acceptance higher. No one's in a rush to take profits, and no one's in a rush to try and short against this move. So you have acceptance higher. That's a very key variable to consider when taking not just an opening drive, but considering what the stock might do that day in general. The other thing that we noticed was the RSI. So the RSI is something that we have other videos on that we can link to here that really helped our timing with the opening drives in particular. And it's not so much that we're looking at a direct reading of the RSI. We're actually more interested in seeing a divergence play out or a reset. So what that simply means is after such a big move on the stock itself in the pre-market on the gap up, you can see this is a 15-minute chart. It's just a little easier to see here that on these dips, we've almost entirely reset the RSI, which is just simply telling you that even though the stock made a very large move, there is actually energy available for the stock to move higher. Prices accepted these levels and is prepared to make another move. A lot of people say, oh, it's moved too high, it's not tradable, it's moved too much, and I'm just gonna, sit on the sidelines, or maybe they'll try to short this kind of strength. And knowing what to look for in this example can really help you navigate the trade properly. So that was another key thing with the opening drive. And then let's get into how we managed or executed this position. So going into the 5-minute chart, you can see that on the open, we had a little bit of volatility, and then on this move lower, we actually trapped this pre-market structure right here and then started the turn. This was the point of which we got our entry. So we entered right here on this turn, risking these lows. And the purpose of that is because if the opening drive is going to continue to work well and buyers accept price at these levels, the end result is going to be momentum to the upside. So we're going to be looking for a quick move, a very fast snapback higher that we can trade. Now, what's very cool about this setup in particular is because of this trap and making a little bit of a move down first initially off the open as price is digesting the large gap, this created a super high risk reward scenario. So this is already, taking a step back here, big picture context, very, very strong A-grade variables, given the amount of aggressive buyers that are stepping in after this big of a beat. So when you apply that to a high risk reward setup and size, you then begin to create exponential gains in your account. So this is where you can really make a difference in your account by increasing your size. And it's easier to get even more size when the risk reward is this straightforward. So we caught this entry here and then traded it and took some profits along the way into that aggressive push higher through the pre-market high. So this is a move from 275 all the way up to almost 288 in a very short period of time. So 13 points higher and in less than like 15, 20 minutes or so. All right, so that was the opening drive trade. Now, if you're not comfortable trading the open or not as experienced trading the open, there's actually another trade that oftentimes sets up on these types of trades. I call it an intraday setup, and this can form in a variety of different ways, but the point is applying this to the right stocks is what is important. So on MDB, this is trading, elevated volume, very significant move, and it's accepting higher. And if you miss that first move, you can look at this price here. You see a bit of a flag develop intraday. So you have a series of consolidation setting up and then a turn right here and break out of that consolidation. Now, one thing that's interesting is when you trade enough of these setups, we actually around the opening drive here, once we held in this spot and started to push, I made the comment on stream that this is very likely going to close on the highs. The only reason I made that comment was not because of just predicting or crystal ball, but it's because of reps. I've seen this many, many times before, and this is just a small encouragement to traders that, might be putting in the work right now. When you take enough reps and see enough of these setups, and it's also the purpose of reviewing and taking the time to watch videos like this, to put in the work to build that pattern recognition, so then you can start to identify these in real time and begin to execute them on your own. So with that being said, this can either be a separate trade or an opportunity to add size or trade just another setup, depending on whether or not you caught the opening drive or not. But this consolidation structure here that broke up higher ended up leading to a very nice trend move up to the highs, which we did end up closing on high of day. That was the day one intraday setup. So the second trade within this opportunity on day one. All right, so the third trade that we have is a day two continuation. This is a very good playbook trade that you can add to your playbook. And as you can tell, there's several ways to get involved in a name that has this big of a catalyst. That's the key and the takeaway that I hope you get from this video, that it's not so much, a certain setup that might form intraday or a strategy. A lot of traders will try to create a strategy and then apply it to every stock. What I'm encouraging you to think about and where real edge exists is it's actually the stock that matters more, and then finding strategies within that stock when it's in play, when it's actually moving, when there are a significant number of market participants there, the price is going to be more fluid and it's going to give you more edge in whatever strategy that you are trading. So day two setup here is very straightforward. It's super simple, easy to learn and understand. You're just looking to take a break of the prior day high. So let's look at the variables here. You have day one that closed on the highs, which is a very strong sign of continuation. The RSI in the pre-market is fully reset here. So you have, again, more energy available while the stock is higher. So the stock is higher than it was yesterday, and yet it's more oversold. That is just telling you there's plenty of energy if price goes higher for it to continue. All right. And then we also have key alignment with a psychological level of 300. So the prior day high here, 297.26, and then 300 is a key psychological level. And that is a very significant thing right on the open that gives you the framework for the trade. Now, when it comes to the entry on this trade and how we traded it, once I saw this check back to the 297 prior day high, got aggressively bought. So what does that aggressive buying tell you? If we go into the 5 minute here, it's a little easier to see. This just tells you that there's still buyers there. There's still buyers present, even at these levels, even after the stock gapped out 30%, the stock ran up all day and closed on the highs. You know, a lot of traders get stuck in this mindset of, oh, it's up too much, I'm not going to buy it. Throw that out the door, throw it out the window. This is a great example of how you could just let price action tell you what to do next. So we've checked back and price got absorbed immediately into that prior day high back test and then started to run very quickly. Once I saw this reaction, this is yet again another very high risk reward setup, because you can say to yourself, if we get under that 297 prior day high, then you're more likely to consolidate, maybe get a little bit choppy and it's not as good. But getting that violent of a reaction there tells you that there are buyers still here wanting to participate. And so that momentum from yesterday, you're expecting to continue into today, which is why we call it a day 2 continuation trade. So that was what gave us a conviction to participate in this. And then we actually ended up getting a trend move all the way up into the highs on day 2 again, which is the way that most day 2s behave. They're a little bit more trendy in their nature. So what's the key lesson here? What's the main point of the video? It's to show you not only that, you know, what you trade is super important, but also taking the time to review setups like this and get familiar with them and understand what makes a trade have edge is what's going to give you the conviction to size up in your trades. And sizing up is the beginning of really getting and achieving exponential growth in your account. So, you know, the most important thing is these setups are easy. They don't have to be hard, but a lot of people will try to apply them to everything instead of focusing on something that is moving very well. So I hope you find this super helpful. If you traded MDB, let me know how you approached it. And if you have any questions, as always, leave a comment in the section below and look out for the next video. Thanks.